Hello, everyone. My name is Carl Jeffrey from Finding Petroleum in London. And in our webinar today, we're going to look at the remaining geological potential for UK North Sea oil and gas production. And we're also going to look at the shift in investor sentiment, which would be needed if we're going to achieve the potential. And we've got speakers today from Westwood Global Energy. So in 2019, the UK regulator, that's the North Sea Transition Authority, projected that 6.5 billion barrels of oil equivalent could be recovered from the North Sea in the UK between 2025 and 2050. And since then, the projection has been revised from 6.5 billion down to 3.8 billion. And the difference, of course, is that in 2019, the regulator's main strategic theme was maximising economic recovery. And today's fiscal, regulatory and political environment has led to companies deferring or cancelling their plans for investment. So we're going to hear today from Alyson Harding and Matthew Belshaw of Westwood Global Energy. Alyson is based in London and she's worked for a variety of companies before Westwood, most recently 12 years as exploration manager of Atlantic Petroleum. Matthew is based in Aberdeen and he's worked for 8 years as a subsurface data analyst after studying petroleum geoscience at the University of Aberdeen. We're going to have a presentation from Alyson and Matthew of about 30 minutes and a Q&A session. And the Q&A is going to be moderated by David Bamford, who's a past head of exploration with BP, among other roles, and Yvonne Telford, the research director for Northwest Europe Energy Market Intelligence with Westwood Global Energy, will be joining us in the Q&A. She's got a background as a production engineer and an energy analyst. You can put questions in the Q&A box at any time. You can upvote other people's questions, and we'll reserve the right to dismiss questions which aren't directly related to the topic, which is understanding production potential of the North Sea if the investment climate was better. So Matthew's going to start. I'd like to invite Matthew to start the talk. Cheers.
Thanks, Carl. I'll just share my screen.
Yeah, that's good.
Yeah, thanks, Carl. So to set the scene, there's been a lot of rhetoric recently surrounding the UK oil and gas being in terminal decline and the outlook looking bleak and so on. So the OE UK approached us to look at what opportunities are still out there to try and frame the discussion around the sector in a more positive light. That work forms the basis of what we're presenting today, and we've added in some extra stuff from other analysis and including E&A trends. So to set the scene, we can look at how production forecasts have changed and been downgraded in recent years. First, let's acknowledge that oil and gas recovery is based on the level of investment. So in 2019, the NSTA projected that 6.5 billion barrels could be recovered from the UK North Sea between 2025 and 2050. At the time, the forecast was 1 million barrels per day at 2030, reducing to 0.6 million barrels per day by 2040. That can be seen in the grey line on the graph there. Its strategic theme at the time, as Carl mentioned, was maximising economic recovery, with a challenge for the sector to achieve 1.3 million barrels per day in 2030, reducing the forward decline so that production would be around 1 million barrels by 2040, which is the green dashed line on that chart. Since then, the NSTA has revised down their estimates to 0.6 million barrels per day in 2030 and less than half that by 2040, with total recoverable reserves of 3.8 billion. If we look at that compared to demand, it is only 25% of the 15 billion barrel oil and gas demand estimated by the Climate Change Committee in a balanced pathway to net zero by 2050. The UK is set to import a large proportion of the gap. By 2030, when the EPL is due to end, domestic production will contribute only 1/3 of domestic demand, and that could be in single-figure contribution by 2040. Westwood's production forecast is a bottoms-up approach, so it's based on economic COPs, and that's shown in the black line on both the charts. You might have noticed that post 2032 on the top chart, the Westwood forecast deviates from the NSTA outlook. This is because of fields ceasing economic production. The map on the right-hand side shows the impact of the forecast, showing our current view on when fields cease production. So in 2019, there were 90 producing hubs operating. This is down to 67 in operation or under development currently. By 2030, there will be 43. 2035, we predict it'll be down to 20 and only 4 post 2040. Now, these hubs are interconnected, and there is a risk that we may see a domino effect and some hubs being forced to cease prior to their economic COP. We have seen this before with the closure of the Thedlethorpe terminal. So looking more at that interconnectivity, here we have a tube map showing the interconnectivity between all the infrastructure in the North Sea. The exact geographical location might not be completely accurate, but it's how all of these systems are interlinked that's important. The midstream infrastructure is not as simple as 1 or 2 pipelines to each terminal. Only the SNS produces predominantly dry gas. Everywhere else it is gas and liquids. So there are 2 export routes for many hubs. And even then, there are added complexities with hydrocarbons being transferred from one pipeline system to another. For instance, gas from the West Shetland pipeline system, so that's Clare, Schiehallion, and soon to be Rosebank, is sweetened at Sullom Voe terminal, exported to Magnus via the Flags pipeline to arrive at the Shell St Fergus terminal. Now, we've heard a lot recently as well about jobs, and this schematic also gives an indication of how widespread those midstream jobs are. So we've got terminals at Bacton, Dimlington, Teesside, Kinneil, St Fergus, Orkney and Shetland, so across the full length of the UK. To demonstrate the complexity of these, here's the top 10 production hubs, and this is based on 2025 production forecast, and the liquids and gas export routes. So for liquids, shown on the left-hand side of that figure, half of the top 10 hubs use Forties pipeline system, but no 2 hubs in that top 10 have the same liquids and gas export routes. Decline in production rates and earlier than necessary hub COPs will therefore have an effect on the economics of the midstream infrastructure. And due to the interconnectivity, there's a house of cards risk here, where one key pipeline system becoming uneconomic would not just impact its immediate entrance, but could impact the economics of other infrastructure. So looking for opportunities to support the infrastructure longevity and extend the hub life is crucial. And just because production outlook has changed, it doesn't mean that the opportunities have disappeared. The geology of the North Sea has not changed, it's just the politics and the investment environment. So we took a look at the opportunities that are out there and what the UK could do in a different investment landscape. Now, we built this from the bottom up. So first, we'll take a step back, and Ali is going to walk us through trends in E&A activity and performance.
So thank you very much, Matthew. So as already been alluded to, the Labour Party have previously outlined its strategy for no new licensing for exploration drilling. However, it seems to potentially support the development of new fields tying back to host infrastructure, but the position on new standalone developments is still unclear. So the future of the North Sea consultation, which includes the licensing aspects, will be key to understand what's going to happen with the sector. So I'm going to start off looking at some statistics, and these are all from the last decade plus year to date for 2025. The map in the middle shows the exploration well density for the decade. It shows how the southern North Sea, Inner Moray Firth and West of Shetlands have not been targeted much compared to the central and northern North Sea in the UK. The charts show the number of exploration wells drilled per year over the last decade, coloured by basin with success rates on the secondary y-axis. And note that the scales for the UK and Norway are the same for comparison. Both countries saw a reduction in exploration in 2020 post-COVID. Exploration activity dropped by 70% in the UK and has not recovered since then. The number of wells drilled in the UK remains low, with only 3 wells completing in 2024 and only 3 wells likely in 2025. Norway, on the other hand, has had a stable activity for the past 5 years with about 30 wells per year. If you could go to the, oh, thanks. Okay, this is exploration performance, and this has fluctuated over the decade in both UK and Norway. So the charts are showing the number of wells drilled per year, coloured by whether they were a dry hole, a commercial discovery, or a non-commercial discovery. And the lines show the overall commercial and technical success rates for the year. In the UK, the average commercial success rate is 29%, but with so few wells completing annually for the last few years, the statistics are not truly representative. Commercial success rate has jumped in the last 2 years to 100%, but based only on 2 or 3 exploration well completions. In Norway, the average commercial success rate for the decade is 30%, but has been improving due to companies developing strategies that focus on ILX wells close to hubs, which are geologically less risky. So these charts are showing the total resource from commercial discoveries each year, coloured by phase, as well as the drilling finding cost per barrel of oil discovered. In the UK, the last 3 years have proved relatively successful compared to previous years, with 125 million barrels discovered in 2023, about 50 in 2024, and about 20 year to date in 2025. Prior to 2023, the UK had failed to add any large discoveries over the decade, with none greater than 40 million barrels equivalent. The 2023 Pensacola gas discovery in the southern North Sea bucked this trend, and that has a current resource estimate of about 58 million barrels equivalent. The appraisal drilling in 2024 to 2025 was a success, and the well tested a maximum flow rate of 38.2 million standard cubic feet per day. There was also further successes in the southern North Sea in 2025 with a Crosgan appraisal well successfully testing, as well as the Abbey appraisal well where an extended well test was carried out. In Norway, prior to the decade, they were finding volumes more than 500 million barrels equivalent commercial resources every year. But with the exception of 2021 and 2023, volumes have significantly lowered since then, with a decade average of 230 million barrels per year. 2025 year to date has been successful after what was a disappointing start of the year. However, of the about 325 million barrels that has been discovered, a lot of this is dominated by the results from the Omega Alpha well program, where remigrated oil was discovered in previously gas-producing reservoirs in the Frigg area. But even in Norway, commercial discovery sizes are decreasing. Prior to this year, there had only been 1 commercial discovery greater than 100 million barrels during the last decade, and only 8 that had between 50 and 100 million barrels equivalent. This reflects the increasing maturity of the Norwegian continental shelf. It's also worth noting that appraisal drilling commonly leads to resource downgrades, so these reported annual volumes are likely to change as discoveries are appraised. So here we're looking at UK basin performance, and the top charts show the number of wells colour-coded by basin, both as an actual count on the top left and a 100% chart on the top right. The bottom left chart shows well count by basin coloured by results, including success rates, and the bottom right chart shows commercial resource volumes by basin. So all basins except for the west of Shetlands delivered commercial resources of about 140 million barrels equivalent. The southern North Sea was the best performing basin with 6 discoveries from 12 wells, and there was an additional 3 technical discoveries made. The northern North Sea had a good commercial success rate, but drilling finding costs were higher than it was in the southern North Sea. The central North Sea had a low commercial success rate and high drilling finding costs. The West of Shetland's metrics do not look good. However, of the 13 wells drilled, there was a commercial discovery at Glendronach, but there were also 8 technical discoveries totaling more than 200 million barrels equivalent. The commerciality in this area is impacted by the gas content and the need for an offtake route. So given the right headwinds, some of these discoveries could be commercial in the future. So this map is showing the wells drilled in the last decade that lie within 50 kilometres of the UK-Norway median line. The charts are similar to those shown previously, but only include these wells within the 50 kilometres. So Norway has drilled over twice as many exploration wells and discovered 4 times the commercial volumes discovered in the UK. Analysis shows that the commercial success rates were slightly higher in the UK. But you all know what's driving the lack of E&A in the UK, with EPL taxes and the associated uncertain future fiscal regime, and also government policy decisions. Even if the current headwinds were removed, would companies trust the government enough to commit to spend? So this is my last slide. The map on the left shows all technical discoveries that are made in the UK that are greater than 5 million barrels equivalent. The bubble sizes are relative to the resource size, and it shows that most lie within 50 kilometres of an existing hub, which is shown as the white squares. The heat map on the right illustrates the density of the number of prospects that are greater than 50 million barrels equivalent and have been mapped as recently as 2000 or later. The yellow colours denote higher density and blue colours mean fewer prospects. And most of these prospects lie within 50 kilometres of an existing hub, so there's plenty to explore for. The conspicuous exception is in the West of Shetlands, where prospectivity and technical resources have the potential to create a new northern gas hub. Companies have been postponing the drilling of exploration wells due to the current fiscal and political headwinds. However, there are still licenses with commitments. There are 3 wells from the 33rd round that have firm E&A well commitments, and there are a further 6 licenses that have moved into Phase C, and with that comes a commitment to drill an exploration or an appraisal well. Will these wells ever get drilled? It is worth noting that Norway continues to hold annual APA rounds, with the recent APA 2025 attracting 20 companies. Awards will be made in January. Also, the Norwegian government has invited companies to nominate blocks for the 26th round, which focuses on more frontier areas. The last round was kicked off in 2020 and awarded in 2021, so it's been a while since they last had a frontier round. I'll now hand back to Matthew to look at potential remaining resource on the UKCS.
Thanks, Ali. So that's some of the building blocks of the potential left in the UKCS. And although the investment sentiment is low, the opportunities are still there. So for our report, we looked at the information from our database on the UKCS basin, the discovered resources, the technical discoveries as Ali has shown, and those classed as potentially commercial, as well as risked prospectivity. From this, we estimate that there is a total of 26.5 billion BOEs technically recoverable reserves and resources on the UKCS. Of this, 13 billion BOEs lies within 25 kilometres of an existing hub, which we can see in the chart on the left, and 19 billion BOEs lies within 50 kilometres of an existing hub, which is the chart on the right. However, looking within 25 kilometres, 38% of the discovered contingent resource and 68% of the risked prospectivity lies within unlicensed acreage. If we extend that hub catchment area out to 50 kilometres, those proportions increase to 47% of technical discoveries and 76% of risked prospective resource. The government has stated its intention to not award new licenses to explore new fields. However, we can see that there is a substantial volume of contingent and prospective resource, which exists in unlicensed acreage. So this is the total technical resource, but that does not mean it is all commercially recoverable. Recovery is down to what is technically and commercially viable, and is of course reliant on companies' desire to progress opportunities. So for our report, we looked at 4 scenarios: a low case, base case, high case, and a no constraints recovery case. So if we just first look at the low case, which is on the left, and the high case, which is on the right. The charts show the production outlooks for the 2 scenarios. So Westwood's low case production outlook assumes future sanctioning and E&A drilling is banned. So that results in no future developments, and Westwood's near-term developments. So this is developments that have progressed through internal company decision gates but haven't quite reached sanction yet. So for instance, Buckenhorst or Cambo. So these wouldn't be developed. Remaining production is from fields that are already producing and projects currently under development. In the low case, Westwood has risked the production performance of projects currently under development, as there's no production history known for these projects. But it's also worth noting that we do include Rosebank and Jackdaw, and while this is a low case, it's by no means a worst case scenario. Westwood's high case production outlook is above what is currently expected, given the current regulatory and fiscal conditions and investor sentiment, but it's considered achievable if investor sentiment can be improved to levels seen in recent years in the UK. This has been modelled on a basin level using assumptions including average number of tiebacks per year, average E&A wells drilled per year, the average discovered resource per year, as well as project development times. And that's averaged over the last 10 years. The main constraint on resources developed in this model is the number of developments per year. Further constraints to are hub longevity, annual discovered resources, and ability to commercialize technical discoveries. But the number of developments per year is the main constraint here. In the low case, recovery is estimated at 2.6 billion bowies. This is lower than our base case of 3.1 billion bowies. For the high case, recovery increases to 4.3 billion bowies. So this is 1.7 billion bowies more than the low case, which comes from infield upside and future developments. But it's worth remembering that our high case is anchored on development tiebacks and E&A development tieback averages and E&A figures over the last decade, which has been a rather tumultuous time for the industry and has included 2 price crashes and a global pandemic. So because of that, we added in the no constraints case. This would need a major shift in investor sentiment, and it would need that quickly as well. Remember, the longer that we allow production to run down, the more hubs cease operating and we lose access to the surrounding opportunities. In the no constraints case, up to 7.5 billion bowies could be recovered from the basin. In terms of the total resources of 26.5 billion that I mentioned before, the 3 cases presented here range from developing 10% of that in the low case up to 28% in the no constraints case. Now, there's more detail on what went into the no constraints case in the pack that was put out by the OEUK, but to briefly summarise, we imagined all of the potentially commercial discoveries that are held in our database are developed. A proportion of the technical discoveries are commercialised, and that was based on the technical challenges that each one of those faces. And there is also an increase in E&A activity. For all of this to happen, there would need to be a major shift in the investment landscape, supported by favourable commodity prices and a supportive government. Now, while this is unlikely to be achieved, it does help to frame the discussion. It shows what we could miss out on as a country if we choose not to support the industry. And while we see the no constraints case as unlikely to happen, the high case is certainly achievable. And I know that some of you might think that I'm maybe too young for this reference, but we don't want to be in the Jimbo and Bullseye scenario of here's what you could have won. in a few years' time looking back at this case. It's worth noting that we have line of sight of 15 to 20 E&A wells, which are drill ready, even though the rhetoric around exploration in the UK is feeling bleak. There are opportunities out there. These have not changed, but the investment environment will determine which scenario plays out, and this can be changed. So to summarise, it's worth remembering that this has been done before. If we look at the UK production history, the sector was in steep decline through to 2011, but a mix of high oil prices, motivated E&P players, and some fiscal incentives for developments arrested the decline through to 2020. The reality is that the UK production is in decline. Developments and E&A activity have stalled. The risks don't just apply to offshore facilities, but the onshore midstream sector and service companies up and down the country. We don't want to see oil and gas being used for cheap political wins. It needs to be seen as the valuable national asset that it is. And ultimately, the industry craves certainty and it needs it quickly. So hopefully the November budget will provide that certainty that's needed. Thanks for listening, and I'll hand back over to Carl and David for questions.
Oh, very good. So we'll move into the Q&A section. There's no questions in the Q&A box, but please enter them. But I'm sure David's got some to get us going, so I'll pass over to David. Cheers.
Yeah, thanks, Carl, and thank you both. So let's just go. Could we go back to your? I think it was probably about your third slide, maybe second or third, where you looked at a layout of all the pipelines and gathering systems in the UK. And I'm particularly mindful of, yeah, keep going. Yeah, that one. So Sir Jim Radcliffe was in the papers this morning, or certainly this week, not talking about Manchester United, which seems to have caused him a lot of stress, but about, I mean, the broad topic was the impact of the taxes and regulation, carbon taxes, methane taxes, etc., on his company, which was stripping investment money out simply to transfer it to the government, his argument was. But out of that, you get a real risk to the Forties pipeline system because INEOS controls it and could simply say, you know, to hell with a lot of you. And just looking at it, the FPS, let's say, going down would be a major problem, wouldn't it?
Yeah, certainly. I mean, the graphic on the left as well, showing that FPS has the five of the 10 top hubs for 2025 production, just shows how important FPS is to UK infrastructure. But yeah, the other thing is, you know, you can see from this graphic that there's a number of gas pipelines that the fields that go into FPS are also connected to. So yeah, there's a definite risk of a domino effect, particularly when it comes to FPS.
Yeah. And I mean, he has a business to run, and you know, energy costs, in which is his real point, I suppose, in the US and China are much less expensive than here, and therefore, why, if he was a responsible businessman, why wouldn't he say, you know, the competition is coming from the US? We need to move, and with it would go the Forties pipeline system.
Well, I don't think it would go. That they would sell it.
Yeah, I think as well, because INEOS, there was reports recently of INEOS pulling investment in the UK and shifting it to the US. And the thing is, INEOS has been the investment has been focused on the US for some time already, so it's maybe not as shocking as it first sounds. And I think the timing of a lot of this is key because we've got the budget coming up, and if any of this helps to influence what is in that budget and the outcomes of the consultations as well, then there's probably some of that playing into some of the announcements from INEOS. And ultimately, Forties is still profitable. So while it's still profitable, they wouldn't be looking to close it down.
What, the pipeline system's profitable in itself? Yeah. Okay. Good point. I mean, so I mean, back to I suppose it's a question: have you seen a I mean, maybe Westwood has done one, but have you seen a thoroughgoing geological review of the UKCS as a petroleum system recently? I mean, it was the sort of thing when I was at BP, we probably do about every 10 years or so, and certainly for areas like the Gulf of Mexico, and sorry, we don't call it that anymore, do we? Gulf of America, thoroughgoing, is there anything deeper? For example, have we missed a source rock? Is there a reservoir that, we've dismissed but could still work? That sort of thing, but done on a big scale. Have you seen any evidence that BP or Shell or Total maybe have done anything like that?
I haven't seen anything that they've made public, or nor have I spoken to anybody about things like that. They did in the past. They have done. I agree. They have done things like that. They've looked at where are all the carbonates in the world, where do they sit in the UK? The source rock massive studies, but there's nothing that I know of that they've done recently. In Norway, they have done studies on potential new source rocks that are out in the Barents Sea, but nothing that I'm aware of in the UK. But I might be wrong. It might be that there's some papers in the academic arena that I've not seen.
There is some smaller scale stuff though, in terms of Pensacola and stuff around that area where that's looking at plays that haven't necessarily previously been targeted though.
Well, they've been those plays have been known about
yeah.
for a long time because they've been played out on shore, but pushing it to the offshore. So this is some people call it the Mid North Sea High. Personally, I call it the northern part of the Southern North Sea, where you're going for a Zechstein play, and those are definitely worthwhile plays that need to be investigated further. And Pensacola has proven that play. Crosgan is the same play. There's quite a lot of prospectivity in the area. For example, Horizon have got a prospect in that area that hopefully that's going to get drilled at some stage.
Touching on something you mentioned, I was always struck. I suppose my first coming into contact with the Norwegian Petroleum Directorate, what's it called now? The Offshore Directorate, isn't it? It was, 40 years ago when I was in Aberdeen, and then several times since. And the extent to which they were always thinking about the geology of the rocks, how could they work, where else is there something deeper, etc. And I just don't sense that that's going on. And the North Sea Transition Authority obviously isn't the home for that sort of thing. I don't think the BGS would be funded to do it now. So I suspect that, yes, you've got a few folk, I don't know, for example, Colin Percival worrying about what else you might see west of Shetland. Maybe Shell are doing it as well.
Well, Shell and Total, they picked up acreage in the 33rd round in the West of Shetlands, and so they definitely have got some pretty good ideas as to what they're going for. And they would have, without a doubt, have done some proper regional studies of those specific areas. But whether they've done it for the whole of the UK or just this particular part of the West of Shetlands.
Yeah. The other thing that struck me let me pick up a question. So yeah, so Ewan White is saying, who is they who would pay for such a study? And I guess my answer to that is in the past, exploration was driven by all sorts of sizes of companies, but particularly Chevron, BP, Shell, Total, Equinor as well, did their own homework, did lots of their own homework, and knew what to do next. I mean, just to quote an example, when BP took over Britoil, whenever that was, 1988, we had done the most massive geological potential study that you can imagine. So the answer to Ewan's question is, I would suspect if the majors are not doing it, then nobody's doing it now.
Well, if you go back as far as Britoil, which is a long, long time ago.
It is. It's
I mean, that's like, yeah, that's beyond time began. In those times, there would have been consulting companies like Robertson Research that would have done these sort of studies where they integrate all the petroleum systems, and you would have bought that as a multi-client study. But because of the perceived low remaining resource for the UK, they're not looking to spend money on that anymore.
I think that's true. And the one, I mean, for example, seismic contractors, you could argue, could have done that in the past, like TGS and others. But if you look at what Viridian, who I guess is the the descendant of CGG and TGS do, I mean, they were worried about 3D full waveform imaging. That's what they're absolutely focused on.
But all of those companies have geologists that are interpreting their seismic, and with that, they are trying to get to the bottom of the petroleum systems that they're working with. And sometimes it's really good. You do see on LinkedIn or maybe when they present, you see that they've got all these ideas that they're coming through. So it's like Searcher. I know it's not the UK, but they've got some really good ideas on the Atlantic margin, and fantastic. So there are plenty of people out there that are still trying to do that sort of regional work to understand the whole system.
Yeah, I think you're right about Searcher in particular. I think Neil Hodgson and Katrina
and Karina and
absolutely doing that. Yeah, that's right. Sorry, I'll keep an eye out for further questions. But I mean, one of the things, again, in the press recently, I mean, BP and I think Chevron is the other one, talking about developing deeper prospects in the Gulf of America, where, I couldn't believe the number when I first read it. The pressure is 20,000 PSI or something like that. So they've had to go away and invent a whole new production technology. And actually interesting that BP is, considering the history, ready to take that risk, or ready to invest in that. But where do we know? I mean, do you have access to maps and so on which say these are the deepest wells that have been drilled in the North Sea? And what is the deepest?
The deepest wells?
Yeah, I mean, is there a scope for obviously what I'm asking is, I mean, BP and Chevron explored the deeper way before they got round to announcing production plans for Tiber and the other one, the Chevron one. So they explored in PSIs with accompanying high temperatures, but PSIs of 15, 20,000 PSI. What's the most that's ever been done?
So in the UK, if let's just focus on the UK. I remember John Brooks pushing for deeper plays constantly, and also trying to push for people to drill that extra X feet to make sure that they do try and tag the next thing. He was always going on about Silurian source rocks. I know it's all been looked at before. I think I'd struggle to find something that's not been thought of, that's new, that's deeper and better. And if this technology works then maybe they could apply it to things in the central Graben where there is high impact, HPHT, and you could maybe go deeper in the Triassic in these areas where you wouldn't dare to go before. But I don't know that I can think of a new reservoir that's
yeah.
somebody online is going to prove me totally wrong. So
it's just interesting that you mentioned John Brooks. Actually, I mean, I think the last time I saw him, I was actually watching with him England versus New Zealand at Twickenham. But he was a champion for the industry, pushing, as you say, pushing all the time, do more, try harder, do something different. But sitting in the, what were they called at the time, DTI, maybe?
Well, even before that, it was the Department of Energy, maybe. I mean, I remember them from way, way back.
Yeah, yeah. And you get the impression there's nobody in Whitehall doing that now at all. I mean,
the NSTA now seem to have quite a diverse responsibility, and you're right. They have a lot of work that they have to do on stewardship, and they have to follow fields developments. They have to do the carbon storage stuff as well, and they're probably quite thin in terms of their numbers. So they do what they can.
The other thing to consider when we're talking about deep HPHT wells is it would have to probably be a sizable prize, given the current investor sentiment and so on. Drilling a well, because it would cost a lot to drill a deep HPHT well.
Yeah,
companies.
No, absolutely, a very expensive business.
Yeah. So there's lower risk, cheaper opportunities out there. So I think that's a major factor as well in the UK for drilling those deep HPHT wells.
Yeah, no, it's expensive stuff and new technology as well. I mean, it's not. I'm not for a moment suggesting it's easy. I mean, I guess the discussion and Alyson's response is perhaps not. But have we thought other things we've not really thought of that we could test with new technologies? I mean, I was involved. One of the companies I'm involved with that's based in the US was looking at the Kimmeridge clay, which obviously is a fantastic source rock, as a potential shale development with fracking offshore. And the idea, and so they got licenses in a license round that was about 2014. I can't remember the number of it. And it was very sensible because, you know, using an existing hub with wells that hadn't been, well slots that hadn't been used, and drilling horizontal or sub-horizontal wells and fracking them in Kimmeridge Shale and producing it. But very interesting. I mean, absolutely nobody was interested. And that was 2014, which, as you showed in your figures, was, you know, the crest of a wave, really, in terms of interest. The oil price is going to do this and so on. By the way, Andy Pepper has just told me that I'm the new John Brooks. I'm not quite sure what he means by that, but
probably because you're pushing for deeper.
Well, for deeper things, different things, you know, and that's a question you know, you were talking earlier before we came online about a lot of these wells are low risk infrastructure related wells. And that's good and fine, and you get good success rate and decent volumes. But is there a failure of imagination in there that we've not yet sort of gone? What about this? Yeah, and maybe the only place you can do that is west of the Shetlands now. But
well, and the northern part of the southern North Sea, I think, is also a place that can be successfully looked at.
Okay. Now, I mean, obviously, I know a few people who talk to investors a lot, and it would need a bloody miracle to get most investors in the UK. I mean, I think Ed Miliband would have to stand on his hands somewhere and say, I've been wrong all these years. You know?
No, well, that's not going to happen.
No, exactly. And that was the point Radcliffe was making. You know, you've got now somebody who's absolutely levered into a policy that isn't going to change. Well, look, thanks to Andy Pepper for his award to me. But what do you actually think is going to happen, you two, then? What's your best bet?
Can I go first?
Well,
Actually, let me go first, because I'm the optimist and you're not the optimist. So I'm an explorer by nature, by background. So I'm always totally naive when it comes to things like this, because I want everything to go well for explorers. So in my head, I'm thinking, okay, there's a lot of noise out there. People are beginning to wake up. The public are beginning to wake up and realize the severity of what they're suggesting, and that even if it's only a small amount of additional production that will keep hubs open for even longer, it's worthwhile doing. So I think that people are starting to understand this, and that in my head they're going to say, okay, we're going to allow to have licensing within a certain distance of a hub, and allow the licensing we've already got. So, for example, the licenses in the West of Shetlands that are nowhere near a hub, that we'd let those continue, and also the ones in the southern North Sea and the northern part of the southern North Sea, which also, although there are hubs nearby, they might need a new hub for those. In my head, I would like that to happen very much. I'd like there to be a way out so that we can continue to try and grow the production of the UK. And that's not just exploration, that's also infill drilling and all the other things that are all affected by the EPL. So there's a load of things that they can do to make it easier for oil and gas companies to progress upping the amount of production that the UK can provide for energy security. Mm-hmm. So Matthew, are you going to be a bit more negative than me?
I don't know. So in terms of what Westwood models a base case of 3.1 billion bories recoverable. That's obviously under current regulations and in the current environment. Does seem to be a building momentum in favour of a more pragmatic approach to oil and gas regulation. And there's been reports recently of potential U-turn in policy when it comes to licensing. Ultimately, that's probably not going to happen because the government has always been very vague on what the no new licenses to explore new fields means. So we're probably going to still have some licensing won't look like what it looked like previously. But it doesn't mean that there can't be continued licensing. I think the two of the key things are the continuation of licensing and the EPL. And with the EPL, it's meant to be going out to 2030, but it wouldn't take too much for a government to effectively add a backdoor. They've got the eSIM in place that could trigger the eSIM thresholds that could trigger the enter an EPL, the EPL, and ultimately the gas threshold is too low. But the government could adjust those thresholds, which could see an early end to the EPL. And ultimately, that's what we really want to be seeing, is some pragmatism there to adjust those thresholds so that we can have an early end to the EPL and some form of continued licensing, whether that is just relicensing acreage that has previously been licensed. So yeah, I suppose I'm more on the optimistic side as well, but
okay. Yeah. And put the question, well, let me tell you what I think, and then ask you the question that results from that.
Yeah.
I mean, I think, let's forget who sits in the White House for the minute and think who is the Secretary of State for Energy in the US. There's a guy called Chris Wright. And he founded and ran a company called Liberty Energy, which does completions and fracking. And he built it from basically nothing. So you have sitting in their energy department, the head of it is somebody who knows the energy industry knows it in Denver and Houston very well. And the US is getting its act together with respect particularly to gas. I mean, I used to always think they had their act together, but this is something different. And Europe and the UK, before long, is going to be faced with a wall of LNG headed in our direction, and some from Qatar as well. And that's going to be here in 2 years' time, I would say. Maybe 3, but let's say 2 to 3 years. So that's the sort of time frame our government, I think, has to do something different. And, you know, if I was a betting man, I'd be sort of more pessimistic than both of you and say, I can't see it happening. It's just, you know, the people who talk to the government are not people who are as optimistic or want to be as optimistic as you are, unfortunately.
I don't think that's strictly true. So the OEUK, who's the association body for oil and gas companies and represents, well, not just it's oil and gas companies, including service companies. So it's not just operators and joint venture partners. They are in a constant lobbying of the MPs, government of all sorts, to try and explain the folly of their ways. So I don't think they're definitely being told which direction, what the direction's going to mean.
Yeah. Okay, all right. All I would say is if you want to buy any shares, buy them in US gas and LNG companies or something like that. Right, okay. Carl, I don't think there's any more questions. There's a comment from Andy Pepper about that was a great talk. Thank you both, and I agree. Very illuminating. And interesting comparisons with Norway. And over a long period, actually, Alyson, you have to say, don't you? I mean, Norway has been doing oil and gas differently for certainly as long as I've been in the business. Yeah.
Well, they've always made the exploration bit cheap. You get the tax back on every exploration well you drill. So, I mean, I'd say this jokingly, but in Norway you get paid to fail because it's not costing you that much money to fail. But it means that there's such enthusiasm for exploration in Norway still. Even though the results are getting harder and harder to in terms of volumes.
Yeah, and it's a not national pastime, that's the wrong word, but there's a national focus on it, which
well, yes and no. I think you'll find that even in Norway there are quite a few anti-oil people, especially in the Oslo area. In Stavanger you won't particularly find anti-oil people.
No, they throw them in the harbour, I think, as well.
I've not actually seen that happen, but maybe.
You know,
yeah.
Okay, well, listen, thank you both very much. That's great, and I'll hand back to Carl to close out.
Well, very good. Well, it's a very depressing picture, I guess. For now, Ed Miliband is winning. So as long as Ed Miliband is in his seat, I guess that's going to be the story. And Finding Petroleum, we need to focus on carbon capture for this little while. Yeah, so keep an eye on our website. Hopefully we'll have more webinars coming up, maybe more carbon capture and exploration. But thanks to Matthew, Alyson and David, and have a lovely weekend. We'll see you soon. Cheers. Bye-bye.
Thank you.
Thanks a lot. Bye.
Bye.
Bye.